Welcome to the Deep Dive. We're here to cut through the noise in the crypto world.
Which, let's be honest, there's a lot of noise.
Exactly. It feels like things change every hour. If you want the real insights without getting totally lost, well, you're in the right spot.
That's the goal. We've gone through quite a stack of stuff for you. Some YouTube deep dives from channels like BegCoins and CryptoLion, news articles, Reddit threads, the works.
And our mission for this one, we're digging into recent market trends, those big Bitcoin ETF numbers, the whole meme coin saga, GORK is the big one there.
Oh yeah, GORK.
Plus regulatory updates and, just the general feeling in the market.
It's quite a bit to cover, but we'll make sense of it. And hey, big thanks to our sponsor, BLK Crypto.
Definitely. And if you want to jump into the discussion yourself, check out the Discord links in the video description. Join the community there.
Okay, let's get into it. Those Bitcoin ETF inflows first.
Yeah, let's start there. The numbers are, well, they're pretty staggering, especially that one day, April 22nd.
Right, $912 million on one day.
It's hard to even wrap your head around that.
Well, think about it like this. Up until that point in 2025, the daily average inflow was about, $2.1 million? Roughly 23 Bitcoin.
So that one day was over 500 times the average.
Exactly, 500 times. And sources like BegCoins pointed out it was the biggest single day since November 2024.
So way bigger than the average we'd seen even since the ETFs launched back in January 24. About 11 and a half times bigger, actually.
It really lends weight to this idea that the ETFs have become the marginal buyer for Bitcoin.
Explain that a bit more. What does marginal buyer really mean here?
It means their consistent large buys are basically setting the price floor, or at least heavily influencing the price on the spot exchanges. They're the ones making the purchase that pushes the price up when demand meets supply.
Got it. So their demand is so significant now, it often dictates the price movements.
That's the argument, and these numbers seem to back it up. It points to a real shift in market structure.
And it's not just abstract numbers. We saw Brown University, the Ivy League school, disclose they'd put almost $5 million into Bitcoin via BlackRock's IBIT.
Yeah, $4.9 million. That's a really concrete example of that institutional adoption warming up. It's not just hedge funds anymore.
It shows a growing comfort level in traditional finance, for sure.
Definitely. Okay, so shifting gears a bit, maybe to the wilder side of crypto.
Yeah. Let's talk meme coins, specifically GORK.
Right, GORK, Solana-based meme coin. The whole thing just exploded recently.
And the trigger seemed to be Elon Musk.
Yep, he changed his display name on X to Gorklon Rust, which is, a pretty obvious riff on Grok, his AI chatbot.
And the market reaction was immediate.
Oh, completely. GORK basically doubled in price, almost 100% gain in 24 hours. Hit an all-time high, I think it was 0.083 cents on May 4th.
Wow. Before pulling back slightly, as these things tend to do.
Of course. But that initial surge, it just shows the power of that kind of social signal in this space, especially from someone like Musk.
And there was even that speculation, wasn't there, that GORK might be some kind of parody coin actually launched by XAI.
Yeah, that rumor was flying around. Whether true or not, it definitely added to the hype. Search volume spiked. It became the top trending meme coin on CoinMarketCap for a bit.
It's that classic meme coin FOMO cycle, right?
Textbook example. Driven by hype, social media, and the fear of missing out on quick gains.
Speaking of quick gains.
Yeah.
That trader story. Turning what, $1,500 into $300,000?
Yeah, $5,513 into just under $300,000 in 5 hours, apparently timed right around its listing on the Moonshot exchange.
Makes you wonder, but yeah, the odds are definitely against you replicating that.
Absolutely. High risk, high reward doesn't even begin to cover it. But the story goes, this trader bought about 7.24 million GORK.
Okay.
Then, as the price shot up, they sold off about 3.86 million, banking around $133,000 in profit.
Nice.
And they were still holding the rest, about 3.38 million GORK, with pretty hefty unrealized gains at that point.
Yeah. Incredible story. But yeah, a massive outlier. And as channels like BegCoins discuss, this isn't just about random internet jokes anymore, right? We're seeing meme coins tied to political figures too, like that Trump token.
Exactly. It taps into existing cultural or political narratives. It's this weird mix of internet culture, speculation, sometimes real-world events. It all fuels the meme coin machine.
Okay, so zooming out a bit, broader market trends. There was talk on Reddit about Bitcoin maybe flipping silver in market cap.
Yeah, that conversation's been popping up. And Bitcoin's market dominance hitting 63%, that's its highest share since early 2021.
So more than 63% of all money in crypto is currently in Bitcoin.
Essentially, yeah. It really shows its strength right now compared to the rest of the market. Investor confidence seems focused there.
And that's reflected in price predictions, too. We saw mentions of 94, 95K, maybe even $100.
Those numbers are being floated, yeah. And the rationale points back to those strong ETF flows we talked about, plus rising spot trading volumes, more people trading Bitcoin directly.
It's not just passive ETF buying them.
Apparently not. According to a Coinbase institutional report mentioned in the sources, institutions were also actively buying Bitcoin directly in April.
Why? What was the reasoning?
Seems like the classic digital gold play. Hedging against inflation, concerns about the wider economy, general macro uncertainty.
So they see it as a store of value, like traditional gold.
That narrative is definitely gaining traction in those circles. It's another sign of Bitcoin maturing as an asset class in their eyes.
Okay, makes sense.
Yeah.
But we can't ignore the regulatory side of things. Always the elephant in the room.
Always. And there's been some movement, or rather a lack of movement there recently, especially for altcoins.
Right. Crypto Lion and others cover the SEC delaying decisions on a whole bunch of crypto ETFs.
Yeah, quite a list. Franklin Templeton's Spot Solana and XRP ETFs, Grayscale Spot Hedera, Bitwise Spot Dogecoin.
And Fidelity Spot Ethereum ETFs, specifically the staking part.
Right, that's a lot of delays stacking up. The new deadline for the Franklin Templeton XRP one is June 17th, 2025.
June 2025, that's quite a ways off.
It is, and some analysts, like those at Bloomberg, are saying we might not see final rulings on most of these altcoin ETFs until October 2025, maybe even later.
So what's the thinking? Why the delays?
Well, the sources suggest the SEC might be, taking its time under the new chair, trying to figure out a broader strategy before approving more complex products beyond Bitcoin.
Kind of formulating a game plan before opening the floodgates.
Seems plausible. They need a consistent framework. They have been meeting with industry players, which suggests there's working on it, but it takes time.
Okay. And briefly, let's touch on market sentiment. The Fear and Greed Index.
Right, the Fear and Greed Index. It basically tries to quantify market emotion, looking at volatility, social media buzz, volume, all that stuff. Scale of 0 to 100.
And where are we now? Still greedy.
Still in greed territory, yeah. But interestingly, it dipped slightly, went from 72 down to 60, even though prices were generally up.
So a little bit of caution creeping in maybe,
Yeah.
despite the positive price action.
Could be. Or just the index reacting to various factors.
Yeah.
The usual thinking is extreme fear might be a buy signal, extreme greed a sell signal. But as folks on Reddit often point out, it's usually a lagging indicator. You can't really trade off it reliably. It tells you the mood after the fact, more or less. It's just one piece of the puzzle.
Got it. Okay, so let's wrap this up. Key takeaways from this deep dive.
Well, definitely the big story is that continued strong institutional flow into Bitcoin ETFs. That's a major force.
Right. Then you have the wild world of meme coins, with GRRK as the latest example, driven purely by hype and social media trends.
Yep. And on the flip side, that ongoing regulatory uncertainty, especially holding back the altcoin ETFs for now.
And finally, market sentiment is still generally positive, leaning towards greed, but maybe with a hint of underlying caution showing up in the index.
Exactly. So for you listening, understanding these different threads, the institutional money, the meme speculation, the regulatory overhang, the market mood, it's all crucial for making sense of where things might be headed.
It highlights both the opportunities and, let's face it, the risks.
For sure.
Which leads us to a final thought for you to chew on. We see all this institutional money pouring into Bitcoin ETFs, right? But at the same time, decisions on ETFs for other cryptos are getting pushed back. So what does that concentration of big money, mostly into Bitcoin, really mean for the future? Is it good for the overall market, or could it actually make it harder for individual investors, like you, to diversify and easily access the broader crypto landscape down the line?
It's a really interesting question. A lot to think about there.
Definitely something to consider. Thanks for joining us for this deep dive.
Yeah, thanks for tuning in.
And remember, this deep dive was sponsored by BLK Crypto. Check out those Discord links if you want to continue the conversation.